Price action indicators are the only indicators that will give you a massive edge in the market. In today's video, I'm going to be talking about the best price action indicator for Tradingview. This indicator shows you the best buy and sell points on your chart. Make sure you stay till the end of the video. I'm going to show you a 5-minute scalping strategy that's going to help you trade like a pro. I'm going to show you my exact trade breakdown of a trade that I took a few days ago. I'm going to show you exactly how easy it is for you to achieve the same results. Most people don't know what is the master pattern concepts. This is not just an ordinary indicator. This is a trading methodology. The master pattern indicator maps out the 3 market phases, which helps you understand how the smart money trade. This is crucial for your consistent trading success. This is why 90% of traders lose in the market, because they do not know how to trade in alignment with the market makers. The secret is to identify the hidden price patterns that reveal the true intentions of the market makers. The master pattern shows you this as clear as daylight. The master pattern concepts is the missing link in every crypto trader's toolkit. Let me go into more details exactly how this works. The main components of Indicator X are contraction boxes, expansion lines, and liquidity lines. This makes up one of the most consistent forms of technical analysis, and it's been around for over 100 years. Number 1, contraction boxes. Our indicator software will immediately plot out these contraction boxes whenever it detects certain price action movements. What it is looking for? It's looking for a simultaneous lower high and higher low. Contraction boxes show you where the market makers are balancing their book of business. This is important because it gives you a framework from where you can calculate your best entries and exit points. This is where the supply and the demand equalize with low institutional volume. This is a leading indicator. If you're ever going to use an indicator, it must be a price action and it must be a leading indicator. And it reveals to you the first phase in the market cycle. This is when we get a simultaneous low high and high low happening at the same time. It shows you what is going to happen next. This is what makes this indicator so special. And what happens next is the expansion phase. This is where we get these expansion lines being created. Expansion lines signify now that there's incoming volatility coming into the markets, and this is known as the manipulation move. This is where most traders get taken out of the market. But if you have this tool and you understand this concept, you will be able to avoid these traps. Expansion lines serve as the dividing point between buying and selling activity. The expansion phase creates this whipsaw motion, which I like to call the washing machine effect. For those who do not understand this price action pattern, it can cause significant losses. This price action activity will cause you to enter the charts multiple times in the wrong place. The functions of these expansion lines is they show you the best and safest entries on the chart. Once you understand the bias of the market, Indicator X will give you the best entry points to catch into that trend. Here is an example. So you can see over here, we've got the higher time frame bias, and we use another indicator as well called Imbalance X. Imbalance X is our tool to understand what is happening in the bias of the market. As you can see over here, we've got a red fair value gap trend line, which is our Imbalance X tool, and it is showing that we're looking for sells only. So we jump onto the lower time frame, and then we use the Indicator X, and we're only looking to enter when price is above the value line over here. This is showing us our optimal entries into the prevailing trend. Then we've got liquidity lines. This shows us the precise locations where the retail traders are looking to enter and exit their trades. These become excellent places to look for exits and entries, and oftentimes price will travel from liquidity to liquidity. This is how the market moves. These show you exactly where the stop loss levels are located on the charts. These are usually pools of resting liquidity. You can think of liquidity lines as a map to base your entry and exit strategy off of, allowing you to use liquidity in the same way the market makers use it. With proper execution and understanding of this, it will give you an absolutely massive edge in the market. Liquidity lines can be used in 2 different kinds of ways. It can be used as profit targets to exit your trades. As you can see in an example here, if we entered above the value line is where we enter our short positions. We would have exited at these liquidity lines, and you can see price hit that liquidity line exactly before it had a reaction and started reversing in the opposite direction. This is where the market makers are most likely exiting out of their positions or entering their positions at these key levels. This is where you want to take your profits off of the table. Liquidity lines can also be used to enter your positions. So you can see price comes down, it taps into this liquidity line. We start to see rejection and reversal candles. This can be a sign now that you can enter your long position in this location. The key to remember is where the smart money buys, you buy too, using available market liquidity in the same way the market makers use it. This will allow you to align your strategy with the market makers who drive and move the markets, putting you in a much stronger trading position. The methodology behind Indicator X is understanding the three market phases. Number one, contraction phase, then expansion, then the trend phase. These three market phases are happening in every single trading asset, whether it's stock, crypto, forex, indices. It happens no matter what. It repeats itself over and over again, and it happens on every single time frame. This is the strategy of the market makers. The market is always in one of these three phases, and Indicator X shows you exactly how to figure out what phase it's currently in. You can see on the uptrend phase, we got phase one, contraction, then we get the expansion phase, and then we get the trend phase. And this is the full accumulation cycle. And then in the downtrend phase, which is the distribution, we get contraction, we get the whipsaw, and we get the trend phase to the downside. This is a cycle that repeats over and over again. Now, let me demonstrate to you on the charts how the strategy works. I'm going to break down a full trade and show you exactly the strategy I used to make 89%. Let's jump on the charts. So we're on the charts, guys, and I'm looking at GME USDT. This was the trade that I got into very successfully. I'm going to show you exactly how I did it step by step. So firstly, I'm using two of our indicators over here. I'm using Imbalance X. You can see it's this fair value gap line over here. An Imbalance X, what it does is it plots out fair value gaps and it detects volatility and momentum in the market. As soon as it detects candle separation, it's letting us know when there's increased buyers over sellers or increased sellers over buyers. This is one of the best tools you can ever use to understand the bias of the market. And we also have the fair value gap dashboard in the corner here. So it's measuring multiple time frame fair value gaps, telling you what's happening on the higher time frames and the lower time frames within this candle separation detection. The key to most trading strategies is to understand what is the bias of the market, what is the direction of the market. If you can clearly understand the direction of the market, then your entries become very simple, especially using Indicator X. So in this scenario, I detected a red bearish fair value gap trend line, and this let me know I'm only looking for sells in the market, because at this time, this indicator also colors the candles for you, helping you understand and keeping you in alignment with your bias, which makes it so much easier to trade with. Once you are clear of your higher time frame bias, then you can jump onto the lower time frame, and we use Indicator X to look for our precise entries. So now I jump onto the lower time frame, and you can see over here, guys, this line over here, I'll zoom out for you to show you. This line over here is our fair value gap trend line, and I've activated it to work on the multiple time frames. So you can see over here in this chart, this is an 8-hour chart that I'm looking at, and an 8-hour fair value gap trend line. I like to use the higher time frame trend line because it gives you an idea of what is happening on the higher time frame. Remember, the market makers trade on the higher time frames. So what's great about this indicator, it also plots this out to you, so I can be entering my position on the lower time frame, but it will still keep me in alignment and show me what's happening in the higher time frames. This was the exact place I looked for my entry, right over here. And my confidences were super simple. Number one, I was underneath the higher time frame fair value gap, and it was bearish. You can see all my candles are red. This is what shows me now I'm only looking for short positions. Using the master pattern strategy, I'm only looking for short positions when price is above this value line. This is showing me the best and most precise place to enter this trend. And then I use another tool which helps me get even more confirmation on my entries. This tool is called the TDIX. It's based on an EMA, RSI, and Bollinger Bands. And what we get is this: when we get this RSI white line break out of the Bollinger Bands, we call this a shark fin. And if it happens in an oversold or overbought region, we call it a super shark fin, and it produces these dots. These are a very strong sign that a reversal is going to occur, and we use this to confirm our entries. So you can see we got the shark fin over here. We got price above this value line, and we know we're in a downtrend. This becomes the best entry position to enter this trade. You can see this white line over here. This was my exact entry point. I mean, it didn't get better than that. I got the best possible entry you can get using this indicator. And then I rode the downtrend. And I ended up exiting my position over here. I was very happy with my 89% and I took my profits. But you can see, look how many more entries we could have gotten. Here would have been another entry, price above the value line, going down, perfect entry. Here would have been another entry. You can see above the value line, going down. Here would have been another entry, 3 more entries above the value line, into short, above the value line, into short, above the value line, into short. And here would have even been more entries. So you guys, you can see there is no better tool to help you get the absolutely perfect and best entries into the trend. Key number 1, when you discover the trend direction and the bias, which we use imbalance X to help you do that, then key number 2, we go into the lower time frame. We just look for these precise entries using indicator X. You can see, look, more amazing entries into short position. I mean, how many scalp positions could you have taken here? You could have taken 10 trades on this day. Each one of them would have given you a fantastic return. If you want to learn more about this indicator and you want to test it out, click in the description below. We offer a free trial. Have a look at the website, come into the group, test out the software, test out the indicator, and take your trading to new level.